chapter 1 is an introductory chapter. I would like you to start by, when you get a chance, sign into the Blackboard, go through the learning module 1. Make sure you watch this short video on the manufacturing process of sweet cakes. It was recommended to watch that before we start on chapter 1. I comment back on it throughout the chapter, but the idea is that we will be using this idea of a manufacturing process and discussing the cost side of the production all through the semester. Not exactly the sweet cakes that you'll see there, but I want you to get a feeling for what is going on with production. It's a short little video on how sweet cakes are made, and it goes through a lot of the manufacturing process. So once you watch that video, it'll introduce you to the production side of making sweet cakes. Class will focus on the cost side of that production and the related decisions that are due based on accounting information. We will then, chapter 1 is then an introductory chapter, so we will cover just a few topics. So this will be a really short little introduction to the cost accounting. You can flip through your textbook and get a kind of a feel of the direction that we're going and of the kind of the differences between your other courses. For our first topic, we're going to get a basis of the difference between financial and cost accounting. You've had some financial accounting courses, and you should have taken already the principles course that covered the managerial accounting information. So let's talk a little bit about exactly what's the difference in the accounting information that we'll be looking at in cost accounting versus your other courses. Well, financial accounting are the financial reports about financial position and income based on accounting rules. They're for outside users, so a variety of stakeholders, many times shareholders or government agencies or even banks and that type of users. The information tends to be aggregated, meaning that if you have a large company such as Procter & Gamble, you roll up all the different divisions, the paper towel, the toilet paper, and the other products all into one final number and report that to the outside users. It's usually regulated to protect the public interest, so we have the generally accepted accounting principles that we follow when preparing the financial accounting information. The whole idea is that it's protecting those outside users. The information also tends to be historical. It's based on what happened in the past quarter, past year, possibly past month. It's all about what has already happened. And it tends to be on a reporting frequency, periodic, that monthly, quarterly, and yearly type statements. Now, cost accounting, on the other hand, we're looking at the internal information of the company. We measure, record, and report information about cost. So it's for internal users. It's for the managers inside the company. Many times this is going to be information that you don't want outside users to know about. You don't want the consumer necessarily to know exactly what it costs you to make that product that they're selling you. Then they'll start questioning why there's such a markup on it on the price they're paying. You don't want your competitors knowing about this cost information. That way then they start negotiating with the suppliers to try to get the deals that you're getting. You just don't want this information necessarily to get out to the outside world. So it's for internal users. The information is also detailed. We're going to get down to that nitty-gritty cost of individual products. In that video, such things as what one of those sweet cakes, does it cost us to actually make one? Whereas in financial accounting, it would be big picture of the entire, say, Hostess, what their cost of goods sold are versus the income on all their products they sell. Regulation, well, it's only restricted by the value-added principle. Now, there are guidelines and ethical standards to follow, but generally we're going to be focused on only collecting and analyzing cost information that there's a reason to do so. That the cost of gathering this information is less than the benefit that we're going to derive from it. The information can be current or future-oriented. The idea is what's going on now, how is this going to affect our future decisions, how should we go for our next step. So then we will look at past costs and past trends in order to predict future outcomes. We'll really get into this in budgeting. It's a really good example of a future-oriented thing that we'll look at in cost accounting. And the time horizon reporting frequency is continuous. We're looking at things on a daily basis, weekly. There's no set reporting frequency necessarily from when the manager asks, well, should we replace our old equipment with this newer equipment? It's just time to figure that cost information out and try to make a decision. That's a little bit of differences between financial and cost accounting. So we're going to have a little bit more flexibility in our cost accounting class. There's not necessarily going to always be the one specific way to measure cost and then make that decision based on that cost. As a cost accountant, we'll also need to know a little bit about the organization's structure and the environment, figure out what direction and what information should we be looking at for that organization. Typically, organization strategy comes down to two major types of strategy: cost leadership or product differentiation. Cost leadership, if you think about Walmart, that's a good example of cost leadership. It's a company that's looking to keep costs as low as possible, lessen competitors' prices, and that's their competitive edge. It's about cost. It's cheaper to get products from Walmart than, say, another competitor. So the focus from the cost accounting perspective is to keep costs as low as possible, measuring every single little bit of cost, making sure that we're looking at just pieces that are adding value that the customer is willing to pay for, and keeping prices down as low as possible. First, product differentiation is more along the lines of quality. Yes, there is going to be some sort of ceiling as to what a customer is willing to pay for a product, but the idea is we're going to provide a superior quality or a more unique service than our competitors, and thus the consumer is willing to pay a little bit more for our product. Think about this in Mercedes-Benz. Their cars are a higher level of quality, so they're a little bit more expensive, and people associate quality with the Mercedes and willing to pay that premium price. Another issue the cost accountant needs to be focused on is the value chain. We have a list of value chain functions here. Feel free to read through those, but the idea is all through from the beginning stages of the product or service to the actual disposal of the consumer, this product has a value chain where value is being added to that product. Now, the idea is with cost accounting, we're going to focus on those functions that are actually adding value to the product that a customer is willing to pay for. We'll get into this a lot with Chapter 4 in activity-based costing, with the idea of trying to find those activities that are going into the production of the product that aren't adding any value. Just moving our raw material storage around our factory. Well, a customer is not going to pay you a higher premium for your product just because you paid to have people move around the raw materials in your warehouse. So we'll be focusing on finding those activities that actually add value, and the value chain is one way of breaking down the different activities into the various chain of development for the product. The balance scorecard, which will actually be, if you're interested in Project 1 out of the first 3 individual projects that you can turn in for your first set, is about the balance scorecard. The balance scorecard idea is that we shouldn't be just focused on a financial final number. Net income doesn't tell the whole story. The idea is that we actually need to have a balanced framework approach where we're looking at the various components that will eventually lead to that final net income number. The problem with the financial perspective on its own is, well, that is a historical measure. It's still important. We still need to focus on it, but once we get to that net income and we report it to our outside stakeholders, well, it's too late. We can't change it at that point. So the balance scorecard has these 3 other perspectives that we focus on in order to help protect our net income, our bottom line in the future. First one is learning and growth perspective. It's going to focus on the intellectual capital inside the company. This is going to be the areas of, paying employees to get further training, sending them to take some college classes and paying for that, hiring someone to come in and put on workshops. This is the learning and growth perspective. What will happen in the future? Yes, currently we have the cost going out the door, but the idea is in the future that our employees are better trained and they will provide a greater service to our company. The internal business perspective focuses on those things the organization needs to do well to meet customer needs and expectations. This is going to be how quickly we put our product together, how we handle our scrap rate, those sort of issues, measuring those different things. From, for instance, Dell would look at this when someone calls in to have that computer made to their specifications. How long does it take them to turn around, get that computer made, and sent to them? That is going to be an internal business perspective measurement that they would look at. And finally, the customer value perspective. This is all about customer service and measuring customer service. What happens when you focus on just the financial bottom line and ignore the customer value perspective of the balanced scorecard? That's when you start cutting help desk workers. Say currently you have 5, but they're costing you, say $100,000, and you need to cut your cost. So you get rid of 2 of them. Well, yes, that shows up on your bottom line as a cost reduction. Looks like you're doing a little bit better. But what happens when the customers call in? They're having to wait an hour to talk to somebody. They're getting frustrated. They're having to go through the automated voice system. Well, then they start telling people that you have bad customer service, and that eventually leads to a poor sales number in the future. So focusing on customer value now helps the sales in the future. Alright, so that's an overview of Chapter 1. At this point, it would be wise to go over some of those questions in the textbook. I have also posted them in a folder for you to access. So you have the questions listed, primarily focusing on question 1 and 12, but all the questions are there. The answers are also available to these questions. And then in addition to that, exercise 24 and 32 get you an idea to start focusing on some of the ideas within Chapter 1. The answers, again, for those 2 are available here on Blackboard. Just log in and you would look for this little icon up here for the solutions, or they'll also be listed in a folder by the homework problems. After you've gotten a feel for Chapter 1, you're ready for a quiz. All you need to do is go log into Learning Module. You can go automatically to Quiz Lesson 1, or you can access it through Blackboard, through the normal, just going to Assessments and looking for Quiz Lesson 1. After you complete the quiz, you'll be ready to start Lesson 2. Here you can either complete the learning module on your own or access the previous semester lecture videos. There will also be a video available that's going over the Mikey's Tasty Treats problem in the learning module using Excel for your better understanding of that. So I hope you found Lesson 1 a good introduction to cost accounting. The quiz won't be too hard and you'll be ready to go on to Lesson 2. Thank you and have a good day.